For every founder, startup founder that's listening to this, you can do it in 1 minute.
That's it. That's all it takes.
And people think, you need 40 pages and 50 pages of decks.
I think that was a big learning for me, is like condense, be clear, be very kind of like concise in your approach.
Hi and welcome to Conversations with Loulou. I have a special guest with me today. Firas Jalbout is the founder and CEO of Baraka, a Dubai-born commission-free investment app that is trying to conquer the $350 billion opportunity in our region. With just $1, you can start your investment account and start buying shares in your favorite companies. In this episode, I'm going to talk to Firas about getting started, some of his challenges and opportunities, and we're also going to touch on the volatility that has been hitting the markets this year. Welcome to the show.
Thank you for having me.
Thank you for being here. So tell us a little bit about Baraka. When did you get started? What are some of the major milestones?
Yep. I mean, it feels like it's been many years. I have a lot of gray hairs because of it, but it's been since I started March 2020. That's when I left my last role and started to work on this project. And there's been many milestones in between then, from that point till the point that we actually launched, which was June 2021.
Okay.
So it took us it took us about a year to get a license and to get going, to build the technology and set up an office and to get moving. And we had to battle through COVID, and we were virtual for a whole year and everything. But we started we went live. Actually, we got our license in June 2021, and then we went live in August 2021. And so we've the platform, the app has been live since then, and it's now downloadable in the GCC and a couple other countries. So
okay, it's a COVID baby.
It's a COVID baby. Yes, it was born during COVID. Yeah.
Okay, so what got you to? So for those who don't know you, before Baraka, you used to invest in startups, right? So can you tell us a little bit more about like your days pre-Baraka?
Yeah. So I spent before Baraka, I spent 5 years working at a family office / VC. And I did a lot of investing there, but then before that I spent 10 years in asset management, and that's where I learned asset allocation and investing in public markets and private markets and everything. So I invested for about 15 years before I started this journey.
Okay.
And that's all I've ever known really as a professional career. So it was kind of natural for me to start something like this.
Really? It didn't scare you?
No, it didn't scare me at all, actually. I never felt scared about starting this kind of business. I mean, starting a business in general is scary, but not starting a business like this for me, because it's kind of what I know. I mean, I was investing professionally and personally and for friends and for in general, it's just kind of what I did. And I love it. I really enjoy it. And actually it's what inspired Baraka, because what I wanted to do was give more people access to the kinds of investments that we were making. And, I thought, a lot of the time people would ask me, where do you invest and how do you invest? And I always felt like there was some kind of secret. And like, quite honestly, I just wanted to tell people that there really is no secret. It's just about access. And so just trying to give people access to markets.
But what I meant was, I mean, you were investing in startups, in a lot of startups. And you were investing at the time where startups were pretty nascent here in the region, right? And I assume the failure rate was quite high, potentially. There wasn't as much maturity. I mean, now I think the market is very different from when you started investing, when I started my business as well. It's a completely different landscape. So that's why I'm saying, it didn't scare you, like all of that. You still decided to jump in.
Look, so I mean, I invested in startups. Like I only spent the last couple of years that I was at that family office really investing more in startups. I was really more focused on kind of global investing in public markets, private markets, and more established businesses. So I really only invested in startups like for the last year or two. Locally, globally, we were investing in startups. But anyway. I felt like there was a moment in time where the market was, coming to, like there was a coming of age for the market. And I kind of felt it like at the time that I was leaving, where we started to see more international investors invest in the region. And for me, for fintech, for instance, when I saw open banking, coming online, and these things really got me excited. So I wasn't so scared about what was to come. It was, and yeah, like there's horror stories in the region, as you know, but that's okay. That's a normal part of the startup ecosystem, and it's probably not uncommon. It's probably not more prevalent here than it is other parts of the world, right? Companies die,
Yeah.
That's okay.
So, but so on a personal level, you're a father, right?
Yes.
You're a father of 2 kids, right?
Boy.
So some people could become like accidental entrepreneurs. You chose to actually dive into it. So how does that work with like your responsibilities as a father, as a husband, and then you leaving a job and then starting your own business?
Yeah, look, I try not to overthink it, because it is, like if you overthink it, it's challenging. Right? You have to wait for the right moment. So there's really no right moment. For me, I had spent 15 years in investing, and I knew that the next thing I wanted to do was entrepreneurial. I didn't know when that moment would be, but like I had done my homework, something that some people know, some people don't. Like I spent a few months really researching this before I jumped into it. Like I spent many hours, researching. I still have like a 50-page deck that I did that has a lot of research about, how I put this together. And also on the financial side, like I was saving aggressively, knowing that, I would need some runway personally and so on. And then when COVID hit, it kind of like it all came together, because actually it seems counterintuitive that would be the time that launch a business. But for me, I kind of felt like if I could raise a little bit of money, I could get going, and that would be, if we were going to enter a depressed period, it would be actually a good time to build a business, and that we would come out of it. And it actually didn't even last, as you know. So like it lasted, but like the markets, and for our business, the markets, it wasn't depressed for too long. But yeah, on the family side, I mean, obviously I talked to my wife and we discussed it, and she was supportive, and there's no right moment.
Okay.
Like it is what it is. Either you're going to do it or you're not. And I just kept kind of telling myself, like, either you're going to do it or you're not. Or it's going to be this or the next thing. And that's what I see a lot. A lot of people kind of ask me, like, how'd you do it? And I just stop thinking about it. Just start.
Just do it.
Just do it.
Okay. So you jumped in, you did it on your own. You don't have a co-founder, right?
I have a co-founder that joined me after the fact.
Okay.
And so he joined early, and then he's now a co-founder.
Okay. Yeah. So let's talk a little bit about Baraka then. So it's an investment platform. Can you talk us through why did you decide to get into this business?
Yeah, it's really about kind of, I guess I'm lucky in the sense that I found an opportunity that would match kind of what I felt like was purpose and profit at a certain point in time, where I felt that there was a market opportunity. And so for me, I'm really driven by the mission. The mission is to get more people to invest. More people should have access to markets. They should understand how money compounds over time, and how that's net beneficial to yourself, your family, future generations, the greater economy. I believe these things, and so it was obvious to me that that's the thing that I should do, and so I'm driven by the mission. And
are people I know that people are investing. Obviously, your company is doing very well, but like, what is the profile of people investing? Because looking at this region, for example, I remember, I don't think I bought stocks before I was probably like 35.
We start late in the region.
Yeah, and you think that this is not for me. This is too complicated for me. I don't understand it. I don't want to get burned. So how do you tackle these?
You tackle them kind of like one by one over time. I think that what we can do is create a platform for people to invest, and in our case, it's self-directed investment. So it is people coming on our platform and deciding what they want to invest in, and then using us as the platform to do that. So our focus has always been to try to create something that's incredibly easy and intuitive to use, and it's just accessible. You know, like you don't have to. I think a lot of people feel really overwhelmed when they open up some of the other, you know, competitive apps, and they see like the competitors' apps, I should say, see a million buttons and a million charts and many different things that like 80% of the population doesn't even use anyway.
Mm-hmm.
And so we tried to make it as kind of user-friendly, as intuitive as possible. So that's just meant to make people, you know, feel okay, you know, not anxious about investing. And I think that's one part of the mission. The other thing that we kind of focused on very early was on making it, and we'll continue to do this, and you'll see us continuing to do this, is making it more part of your lifestyle.
Mm-hmm.
And so we start with the news, right? Before we started the app, before we started the investment app, we started a newsletter.
Interesting.
And the idea was to make, you know, an investment newsletter that was something that was easy to read and got you potentially interested in the market, but also just became informative. You know, it just becomes like it's a 2, 3, 4 minute read that like you just pick up small things, small bits and pieces about the market. And I think that's a big part of it, is like, you know, creating content that normal people understand. To get interested in it.
Yeah, right? I get your daily newsletter, and I think it's great. It's written in a very easy way, as you said, easily digestible, and then you break the story, and then you say why it matters, so that also you bring in a bit of context. I think it's great. It's a great way to get updated on what's happening in the markets here as well as globally.
Yeah, I mean, it's also like, you know, our core audience doesn't necessarily want to read Bloomberg and whatever, CNN or whatever other platforms. I mean, they are accustomed to accessing things in a different way. They shop in a different way. They game in a different way. Their life is, you know, it's just different.
Who's your audience? Let's talk a little bit about that. So who's investing today?
So I'd say that like 70% of our user base is between 18 and 30, so they're pretty young. They are predominantly local, so they are people of the, you know, the 6 GCC nations around us. And yeah, they are, I think we kind of run surveys and ask questions, and I think 50% are first-time investors. So we're capturing a very young audience that is investing for the first time, and will hopefully kind of continue to use us over time.
And where do you see your responsibility as a platform? Because, for example, like I wanted to tackle this later, but we'll tackle it now since you spoke about it. I mean, the markets this year have been extremely volatile, right? There's a lot going on in the world, from inflation to a war.
Yep.
Everything's down. I mean, if you look at some of these like growth stocks year to date, like I looked up a few before this. Like if you look at Uber, for example, it's down I think 40%. Delivery Hero, maybe 70%.
There's horror stories.
Yeah. So how do you deal with that as a platform? If I'm, let's say, a first-time investor, I come in and I buy, I don't know, Twitter, and all of a sudden, you know, thanks.
Look, I think that is the market, right? That's always been the market. Markets are cyclical. They go up and down. People make money and people lose money. We don't give investment advice, so let me just be clear. The point is not that we don't hold your hand in the market. We never have. We've never come out with the proposition of saying, let us invest for you. That's not how, you know, we do it. A big part of our mission is to empower people to the point where they feel like they have enough confidence to make responsible investment decisions. And that means that like people need to learn the lessons of responsible investing, dollar cost averaging, investing over time. You know, these things matter. We try to do that by, you know, pushing content to this effect. Again, we don't give investment advice, but we do try to educate as much as possible. And so if you go on our website or you're in the app, you can read about a topic that we think is important. It's educational in nature. It's not telling you to buy any stocks or anything like that. It's about things like dollar cost averaging, like what is a stock. It's as simple as what is a stock, and it's as complicated as, you know, how do I invest in this over a long period of time, and that kind of thing. And so we try to educate as much as possible with the content that we have. On our platform today, there's no margin. You know, we're not doing 500 to 1 leverage on crazy products. It's nothing like that. It's very controlled from that perspective. And so I think getting started, losing a little bit of money in the market is natural. What you do after the fact is the most important thing, right? I think the other thing that we try to educate about is how you should feel. You know, we can't do it to the extent that we want to do it because, you know, for regulatory matters, but you know, people, you know, once you're investing and you're losing money, and you know this, and we were having a discussion about investing before, is that you feel bad, you know, your stomach turns when you see how much money you're losing. But if you look at the history of the market, you know, past performance doesn't dictate how things happen in the future, but if you look at the history of the market, you take the S&P 500, you know, that's returned on average about 10% a year for the last 30 or 40 years. So like, if you have a long-term view, you're generally doing okay. You just have to keep investing. The people who really get it, you know, the worst are the people who invest when Tesla's 100 and it goes down to 20, and then they pull their money out. But the people who generally do okay are the people that, like, if they believe in something, they keep investing, they dollar cost average, they wait a certain, you know, amount of time, and markets generally come back. But
So you mentioned dollar cost averaging a couple of times. So for the listeners, can we clarify what you mean by that?
Yeah, it's just the idea that, like, if you have $100 to invest, you shouldn't invest that $100 immediately. At one point in time, you should spread it out over, you know, multiple intervals. So, like, let's say over 10 periods, and just invest systematically over you know, 10 different periods of time. And that will give you an average of the cost of whatever you're buying. And so, you know, as markets go up or they go down, you're buying at a specific point in time, let's say at the 1st of every month or the 15th of every month or whatever. And you're just buying whatever at whatever price it is. And that means that you just average the price. And so this is a very important element in it of investing. It means that you are less susceptible to a massive crash because, you know, like we said, the example of Twitter, if you buy at 100 and it crashes the next day at 20, then you're down 80%. That's rough. But if you keep buying, right? If you did your first tranche of $10 at 100 and then your second at 20, then your average is, you know, you're averaging, and then you kind of build your portfolio that way.
And what's the period of time? Is there like a standard, or it's up to you?
It's up to you. It's up to the individual.
Okay.
Yeah. Do you do that yourself? Do you dollar cost average?
No, actually, but I do have a long-term view. So when I do buy stocks, first of all, I buy stocks in companies that I think I understand.
Exactly.
So I haven't really bought stocks in companies that are in industries that I don't know anything about.
Exactly.
Because honestly, I think you need to spend time to educate yourself as well, and most of us don't have that time. So either you spend the time, or you just stay away.
Do you buy ETFs?
I haven't bought ETFs. No.
So there you go.
I haven't bought ETFs. So can you explain ETFs, please?
ETF is like a bundle of stocks that either mimic like an index or a theme, or have a thematic approach to them or whatever. So for instance, the S&P 500 ETF is like you're buying 500. So the S&P 500 is an index of 500 different stocks and 500 different companies. Sorry. And it's like you're buying a share of every single company, but in one security, one product, which is an ETF.
And following on what you said before, so if you buy the S&P 500, then basically you are probably looking at around 8 to 10% return per year.
Yeah, I mean, that's been the historic.
Be
careful because you know, we don't. But that's been the historic return over the last 30 or 40 years. Yeah.
But it's diversified enough. You're not taking on the risk of individual stocks.
Exactly. And so the idea is that you can put your money into something that is well diversified, and if you do it over, I mean, again, like over time, like we have people on the platform that transfer every single month and they buy the same thing over every single month. and you can see it's just a systematic approach to investing. It's almost like autopilot, right?
I didn't know that you had to do it periodically. So I thought that you can buy basically when the stocks are down. If you still believe in the company, you can reinvest.
Of course.
But I didn't know that you would do it irrespective of where the price point is. You know, if you choose to do it periodically.
Of course, there's different strategies. I mean, if you follow the market and you're happy to reinvest when you see your existing positions down 50 or 60%, that's great. But I think a big thing that people don't realize is that the way you feel when a stock goes up and the way you feel when a stock goes down are terribly different, right?
Of course.
Like you feel really good when a stock goes up.
You feel smart.
You feel very smart. You start, investing, dropping more money in.
Yeah.
But really, I mean, in general, you want to be buying stocks when they go down, assuming that they're going to come back, right? This is generally the way that you want to build a portfolio. But it's not easy for people to do that because they're seeing their existing investment going down, and you have to really believe the long-term nature of the market to do that. So it's really, I mean, what we try to do is kind of educate a little bit more about how you should feel, what you should be doing, but we can't actually do that for you. You have to kind of.
But you have an opportunity there. I mean, if you're saying 18 to 30-year-olds are the majority of people investing on Baraka, that's great. I mean, basically it means that they should have a long-term view.
Of course.
They're still very young. They're starting young, which is great. So on the content side, I think there's, it's an opportunity for you to keep educating and
yeah, absolutely. And we'll do more of it, and we'll try to make it more interactive and get people to really kind of engage with us on it. I think there's some exciting stuff that we're doing around this. So,
I mean, you do operate almost like a media company as well, right? with the daily newsletters. I also saw that you're working with some influencers.
Yes.
So why are you doing that? And what's the what was the rationale for that?
The approach with influencers is that this is a genuine belief of mine, is that we, investing particularly in the region, but globally, and I think more so in the coming few years, it's really, it's become almost about community. And I think that people really they really listen to people in their community. And, that can be kind of in your friend circle or online increasingly. And so what we see online is that there are people who kind of share their insight on financial markets, and we don't subscribe to the theory, we don't want people to the idea is not that people share information about a stock and go buy this, and that's not the point. The point is that there's a communal aspect there, that there's lessons that people pass on to other people. And so we wanted to give an opportunity for some of these individuals to kind of share that with others in the app and on social media. Because ultimately I feel like the average person wants to, we're a brand, we're a company, we have an objective, and they are interested in kind of learning from other people. And I think it's a very it's a societal thing, and increasingly we do it online. And so we wanted to offer the forum to do that, but obviously, to control, the message needs to be clear. It's not about kind of driving interest in a specific stock or anything like that. It's about spreading the message of investing and getting more and more people to kind of discuss and feel comfortable within their community about investing. So that's why we kind of.
And has it worked?
Yeah, it's been good. I mean, it's been great, and that platform will develop over time. We're not done with it, and so I think there's also what's really exciting for me is it's the creator economy is something that we really interested in, and I think that is going to grow, and I think that we want to position for that over time, and so we'll continue to kind of build different things and try different things in that space.
Yeah, I think the newsletter definitely has a lot of room as well still to grow. I don't know if you're familiar with Stock Twits.
Yeah, of course.
Yeah, so you also get a daily newsletter and opinion and updates and so on.
But now people don't want to read.
Yeah.
So it's about.
True.
audio and video, and so we'll see what we have to do there. Tastes evolve and they change, and people want to do different things. So it's really about just keeping it fresh, and that's not easy. What I've come to.
Well, you're doing a great job, and I think a key learning here, which I think is very interesting, is that you started before you launched. So you started with the newsletter before you put the app out there, which is very interesting because normally people wouldn't do that.
Yeah, we had a lot of time because we were applying for a license, and it took quite a long time. So we thought, hey, might as well get things going.
But turned out to be a good decision.
It was good. Yeah, it was good.
So we spoke about the volatility, right? And so we're startup founders, and fundraising, I think, has always been a challenge in our region. Things are changing, as you said. First of all, you were part of the Y Combinator accelerator. Can you tell our audience a little bit about like the significance of being on there and what is Y Combinator?
I mean, it's a accelerator program based in the U.S. and they've graduated some of the largest U.S. global companies, tech companies, Airbnb and Coinbase, and there's numerous examples. I think if you add up all of them, it's something like they've created like $1 trillion of value or something ridiculous, and it's pretty incredible. And so it's a great program. They've done an amazing job. They're now doing more global outreach, and so we did the summer batch in 21, and it was an amazing learning experience for me. I got to hear the stories of Airbnb and multiple other platforms from the founders, and then it was a 3 or 4 month program. I can't remember now. Of like 3-4 days a week of just kind of intense 3, 4, 5 hours of dialogue and activities and things that that we had to produce for them. And contrary to popular belief, it is not a cakewalk. They really push you and they ask you some really tough questions. And it's not like they're not patting you on the back all the time.
Okay.
It's very much about kind of like, why do you think that you can do this, and what is your motivation, and things that like really force you to kind of like dig deep. And
but so getting into it is already a huge milestone, right?
We were lucky. Yeah, absolutely.
Why do you think you were lucky?
I don't know. I mean, I think I don't know what we did differently to anyone else. We applied, we submitted the application. You record a video and so on and so forth. I think probably our passion for this business kind of came out. I'm genuinely driven by the mission of this business, and maybe that's something that they look for. That's what I can say.
Okay.
But yeah, I mean, we were lucky because I think it's an incredible opportunity. It's a great learning opportunity, but also, I mean, their network is phenomenal, and it's opened up the door for us in many different ways. Yeah.
So you get $120,000, correct? An investment from Y Combinator. Yeah. Against like some equity, 7% of equity, and they open up their network for you.
Yeah, and their network is incredibly powerful.
Yeah. How was the demo day experience? Like so the demo day is basically when you, at the end of those 3-4 months, you are pitching to thousands, right? Of investors all over the world.
Thousands.
And you had to do it virtually.
Virtually, luckily.
Luckily, okay.
I can't imagine pitching to a
crowd,
thousands of investors. I mean, it is arguably the most prominent VC investors in the world.
Yes,
they're all there, and you get the attendance list. I mean, it is it's partners from the top to the bottom. Everybody's there, and it's intimidating, of course, but it's just 1 minute. 1 minute. Yeah, so you spend.
Okay, so
preparing for 1 minute.
For every startup founder that's listening to this, you can do it in 1 minute.
That's it. That's all it takes.
And people think you need 40 pages and 50 pages of decks.
I think that was a big learning for me. Is like condense, be clear, be very kind of like concise in your approach, and that helps. That really helps. That really like. Investors see a lot of people and they talk to a lot of people and they read a lot of decks and stuff. It's not about making yours stick out because it was designed well and bright. And it's like, it's really just about the information, how concise it is, and how you kind of tackle your problem, and how you show that, you know, you're capable in solving this issue. So these are the kinds of things, like they kind of like, people think like, oh, what did you learn? Yeah. It's like, it's actually very basic things, you know. It's like just to be concise, be confident, be like, understand your business, track the metrics.
But that matters.
Of course. But like, so often we kind of lose sight of that, right? You know, we do these big things and worry about these, and, you know, pitch, and it's actually not about that at all. It's really just about 1, 2, 3. So that's what I learned. So the key takeaways from your experience then at Y Combinator would be? Be concise. Be, you know, their tagline is build something that people want. You know, it's quite simple, right? Build something that people will buy, mm-hmm. or use or whatever. You know, these are like, honestly, it's as simple as that. And then obviously, like, build a great team, you know, be passionate about what you're doing. These are all incredibly important, mm-hmm. as well. And of course, as a founder, you were able to fundraise immediately off the back of your demo day, right? Yeah, I mean, we went into YC having raised money, which, you know, not everyone does that. Some people kind of, it's the first check, and they build around it. And we had raised money, and then we got into YC, mm-hmm. and then we raised a little bit more money, and then yeah. It's a great journey. Yeah, I mean, raising money is, I mean, the other thing about, you know, the lesson from YC is that raising money is not any metric of success. It is really about kind of building a product and a company that people want to use. And that's, you know, raising money these days is, you know, people can raise money. You can raise money these days. You can, yes. Building a business is a whole other animal. Mm-hmm. So like, you know, I used to think that like building a business was raising money. And then I got into YC and I realized that actually, like, it is like, that's not how you build a business. It's not about raising and spending money. It's about building a business. You know, it's a really different mindset, actually. So I'm curious on the fundraising part, where there's a whole drive now that basically investors are very much concerned about path to profitability. Yeah. You know, the whole thing that like growth at all costs isn't sustainable, is not going to work. We're seeing a lot of companies, as I said earlier in our chat, you know, where their valuations their market caps, listed companies have dropped 40, yes. 50%. So did YC say something about that? I'm curious. So because, I mean, they are known for graduating high growth, fantastic companies. I think, sorry, the biggest lesson from YC, and I failed to, I blanked out, but it's all about product market fit. Okay. So it's about building a product for your market and making sure that, you know, it works. That's the key takeaway. So it's 4 things, I think, if I remember, yes. From YC. Yes. But that is, so it's, if I could summarize, it's that. Okay. So can you repeat them again? Product market fit. Uh-huh. That's it. Okay. Be concise. Exactly. Be concise. Yeah. No, that is the most important thing that they kind of teach. Okay. What's product market fit? Product market fit is building a product that people will use, they will buy, and for your particular market, and that can be kind of, you know, it's proven to work when, like, you don't have to spend a lot of money on marketing around it, and it has a natural audience, and you found that natural audience, mm-hmm. or that natural audience. So basically, people buying your product, yeah. without you pushing it down their throats. Exactly. And with marketing. Sustainable over time, and, you know, and them coming back. And then coming back. Exactly. Okay. That is the lesson of YC. You know, it sounds, you know, high level, but it's very much about that, really. When you think about all great brands and, mm-hmm. and the products that they build, it's really about that. It's about finding that thing that gets people to say, like, oh, I want to invest Baraka, or I want to go stay in a short-term rental, Airbnb, mm-hmm. or whatever. That's real product market fit. Okay, so let's go back to the profitability point. Okay. So you said the most important part is product market fit. Yes. But also sustainability, right? Sustainable growth is what are they preaching basically now? Look, the public markets, if you believe the public markets are, dictate kind of how the private markets will play out, then you know that something is coming in the private markets because the public markets have really punished unprofitable companies. And so I'm not going to predict how it plays out. I don't think that, that makes sense. But there is a push for profitability, and it starts from the public markets and it goes all the way through to the private markets. Does that mean that there's no money for venture? No, there's lots of money for venture, especially on the early stage. But I suspect the way that some investors think about this now is that, well, I can buy X company in the public market. If they're comparing, let's say, a late stage company that's not profitable and won't be profitable for the next 3, 4, 5 years, probably the way that they think about it is I can buy X company in the public market, and they're growing at 20, 30, 40% a year, and their stock price is down anywhere, you mentioned this earlier, but anywhere between, let's say, 30 and 60% in some cases. So I can buy that company, or I can buy the non-public private company that is X at whatever valuation. Which one do you choose? And so I think some of the later stage investors might be, more interested in the opportunity in the public markets to some extent. And so that creates a, a bit of a funding gap at the end, and then that will probably ripple through to the rest of the market. And so the push to profitability is absolutely real. Yeah.
We feel it. I mean, I feel it, as an investor as well. Like we're starting to ask these questions a lot more. And if a company is not showing a path to profitability, then I think it is very tough, for them to get investment today.
Yeah.
Even though, as you said, I think there's a lot of money though.
There's a lot of money.
Yeah.
But we don't know when. There's a lot of money today. Right. And there's a lot of money for early stage. But, But I think that the cycle takes time to kind of, run through the rest of the market. It just feels like this time around, the narrative or the expectation has changed. The expectation has changed. Like I don't know if that reverses over time, and I think that's what we have to see. Like, will the same fund be fine in 6 to 12 months and say like, actually, don't worry about profitability, go nuts? We don't know. May not be.
What are you seeing?
The people are
tightening
focused on profitability. Yeah.
So for startup founders that are looking to fundraise at the moment, what are you seeing in terms of what is like in demand, basically when it comes to business models, and what's not so sexy at the moment?
Stuff that makes money is always good.
Okay. Like we see a lot of, for example,
corporate cards. There's a lot of those, right?
There's a lot of commerce. I'm seeing like things on quick commerce. There's a lot of companies trying to do that. There's a lot of
you see more deals than I do.
Yeah, B2B, marketplaces.
Crypto, everything.
Crypto, there's lots of crypto actually.
So I mean, that's all kind of
interesting.
really
What's your view on Web3 actually, since we spoke about crypto?
I'm a big believer. I think that it's going to take many years, and there's going to be an adoption curve there for sure. I'll be the first to say there's a lot of junk out there as well. But there's a lot of great use cases, and there's a lot of opportunity in that space.
Do you think this is something that this region is kind of leapfrogging on?
I hope so. Man, I hope so. I think it's great. I mean, it's phenomenal. I mean, look at all the companies that are coming here, and the ripple effect that's going to have on the broader ecosystem is phenomenal. There's going to be a ton of.
Are you talking about like the Binance and the Kraken companies. And those companies?
Yeah, all the crypto companies. There's like 10 exchanges and whatever, but like it's the next layer that's going to be more interesting. It's the companies that have real applications, and they'll build for this market, but they'll build globally as well, and they'll create a massive industry here, and people will learn from that. And they'll learn, and then they'll go create other businesses, and I think that's good.
What's next for Baraka?
Get to profitability.
Get to profitability. Good strategy.
Look, we're doing a lot of exciting stuff. I geek out on like some of the features and stuff that we're going to launch. So I could talk to you about like, the strategy and all these things that we've got in the pipeline. But I get excited about some of the, the smaller, the features that we're launching and getting people to kind of like adopt certain things.
Is there something that you can share at this stage?
We can't, but stay tuned. And yeah.
I heard you have great swag, by the way.
Yes, we do. I should have brought you some.
Yes.
I owe you a box. You just reminded me now. Yeah. So we're gonna. The thing is that we have quite a bit of fun with it. I mean, we've just done an outdoor campaign, which was
yes, I saw that on the Sheikh Zayed Road.
It was cool. We learned a lot. It was our first one, and it's just to kind of get our brand out there. We've just rebranded a bit, and it's good.
How big is the team now?
Depends which day you ask.
Okay.
I mean, it's like it's constantly growing and changing. So yeah, we're kind of in the mid-30s.
Okay.
Yeah.
And you're still based in Dubai for now?
We are, yeah, with the focus on the region and working on other countries.
Okay. Thank you so much.
Thank you. Nice to speak with you.
Thank you for us.
Thank you.
Thank you so much for tuning into this episode of Conversations with Loulou. To know more about Baraka, you can visit their website, getbaraka.com. As usual, please visit the show's website, conversationswithloulou.com, or you can reach out to me on social media at Loulou Khazen. Don't forget to subscribe on YouTube and Apple Podcasts to get the latest episode. If you're enjoying the show, we'd love to hear from you, and please do leave us a review. For now, I wish you love and light, and see you in a few weeks.